weekend. What are your thoughts here after we've had this big comeback?
I'm just psyched to be here with you in person when the market's not down 5%.
I told you I was going to put your picture on the door and not let you in because you had a knack for being here on some of the biggest down days lately.
I think the worst 4 days of the year. So we're finally here, headed into weekend with a little bit of better news. Look, it's always hard to say, is this the exact bottom or not? I don't know. But I do think we got that combination of valuation, sentiment, and fundamentals making people think risk reward is getting a little bit better here.
What do you say though to those who say, yeah, but that's fine and great. We've been here before a couple weeks ago. We went up nicely. Maybe we go up a little bit more this time. But all of the issues that withheld us from feeling better are still in front of us. So how can we really say all is clear?
I don't know if all is clear. I don't think you really can say that. I think we can look around and say, all right, well, I think about the things I'm getting asked, right? There's a lot of cyclicals trading between 2 and 4 times earnings. So they're embedding earnings down 75%. So we go back and study the last 50 years and say how many times have earnings and revenues gone down this much? Are we in a similar scenario or worse than average today? Are there anything where risk reward looks good? I think there is. I think metals and mining look attractive. I still think energy makes a lot of sense. We think semiconductors actually makes sense here, down 30%, and probably still have pretty good demand, supply, and balance.
You always have a bias towards semiconductors. That's the former semi-analyst in you, right?
That's true, but if you look back at the last 10 years, that was a pretty good bias, right? I mean, they've been pretty good kind of GDP plus growers and margin expanders. And then I think on the growth side, people were saying, is innovation really dead? Or is there anything down? NASDAQ's down 25, but maybe stocks underneath 50, 60, 70 down. Are there any opportunities? So I think that's most investors I'm talking to are trying to figure out, even if I know earnings are got to declines, there's still stuff that's worth it in the face of that.
Are they inclined, the ones you're talking to want to put fresh money in? We had the Bank of America Fund Manager Survey, the flow show, which was the highest amount of money going into equities in some 10 weeks. Now, I don't know if that's long conviction money or not, but at least it's some money coming back in.
Listen, if we're looking at the last few years, if you take a traditional long-short hedge fund, I own 40 longs, I'm short 60 stocks, I'm running net long, and we look at what we think will absolutely be the worst thing for them over the next 6 months, that's basically what will happen. So if I say that's what's going to happen, what is that? Energy and materials outperform because most of them don't do that. We get a tech rally that they sold some down, they miss it, they chase it and get filled positions over the next couple months, and then it collapses again in the fall. So could that happen? Yeah, maybe it could, because I think earnings probably are up this year versus last year, but maybe a little bit not so much, up 23 versus 22. So you can get a squeezy rally, multiples can expand. I think it's a stock pickers market, though, and I'm pretty excited about the opportunities I see.
So what do you say to somebody who's listening to this and who endured, this week of up market and said, I turned on the network and I heard everybody a week and a half ago was gloom and doom. And now the market's been up a lot, so everybody's feeling all better. But if you split the difference and you say, yeah, but the Fed is still doing what it's doing, and I'm not going to fight the Fed, doesn't that win out over everything else or not?
I mean, look, quantitative tightening.
You know what I mean, too, right? Now everybody's positive now.
Yeah, look, I mean, it's amazing how two-day price momentum changes the view when these are, multi-year economic and earnings cycles. So we're all probably getting too high and too low based on two-day price action. I think that's a spot-on comment. I think underneath that, your point is right. Quantitative tightening brings about a different set of investment opportunities than quantitative easing.
Hadn't even started for QT yet.
Right. But the market and the perception of rates started last November and in earnest maybe in February, right? So there's certainly some anticipatory element the equity market has, and I think most people would say earnings are likely to not grow as rapidly in the future as they did in the last couple of years. I think that's in the price, and I think the question is now, where are two negative assumptions in the price where I can find some opportunity? So in some ways, I think this could be a clearing out where stock pickers can actually make some money along short again for the first time maybe in a while.
So let's talk about some of those areas. I'm looking down at my notes, and I see financials this week. Bank of America's up 9%, JP Morgan's up 11.5%. The gains across the space have been rich this week. Yeah. Something to believe in, to buy into, or no?
I'm probably a little more neutral to negative on the financials. The old school guy in me would say when stuff starts optically cheap in the banks, yeah, maybe it's because the curve will steepen and growth will be good, or maybe it's because there's things that are marked that aren't fully accounted for yet. And, we've all been scarred enough in our careers to think maybe there's some private credit or something that's not totally marked, and it keeps me a little bit worried. We're kind of recommending a neutral stance in the banks, preferring the big ones to the small ones, just thinking that the small ones are more pure rate play, where the big ones at least have some other opportunities for growth, investment, banking, et cetera.